Welcome to another week in review. We're going to be looking at the trading week of April 21st, 2025. Going to start out with data that we have this week, as we normally do. It's pretty light, which is nice, especially considering how much we had last week. So going into Monday, we don't really have much. We have Goolsby speaking at 8:30 in the morning. Monday is a holiday, like a bank holiday in Europe, not in North America. So I would expect Monday's trading to be fairly light volume. I don't expect a lot to move really during that session, and whether or not I'll be trading much of it myself, I guess is yet to be seen. But as far as that day, it's going to be pretty light. So just note that on Monday, it is Easter Monday. It's not technically a holiday here, but it is in other places. Wednesday, we have some earnings in the morning on Wednesday. I'll talk about earnings after this. We have some that are coming out that are important this week. 9:30 we have Jefferson. 9 and 9:30 we have Jefferson and Harker speaking from the Fed. We have the manufacturing index at 10. We have a 2-year note auction at 1 p.m. 2 p.m. we have Kashkari speaking as well for Tuesday. Wednesday, we have Goolsby and Waller speaking 9:30 a.m., 9:45 manufacturing and services PMI, 10 a.m. new home sales. Then we have a 5-year note auction at 1 p.m. on Wednesday. Again, nothing hugely impactful. Thursday, jobless claims as normal, durable goods as well, existing home sales. We have Kashkari speaking again at 5 p.m. on Thursday because that guy loves to talk. Friday, we have consumer sentiment at 10 a.m. and then the University of Michigan 1-year inflation expectations as well. So as far as actual data releases, nothing hugely impactful this week. Earnings, we do have some important ones that you need to pay attention to that'll be market moving. So biggest ones I'm looking at here, Tuesday after the close, obviously Tesla. That's going to be a massive one. That's going to have broader market implications for sure. Enphase will be interesting just for the solar sector. Not going to be market moving, but something interesting to watch. Wednesday morning, Boeing, as well as AT&T. Boeing will be very interesting. After the close on Wednesday, we have IBM and we have Chipotle. People love to speculate on Chipotle. I don't know why, but they love it. Thursday morning, American Airlines. Airlines generally, again, interesting to watch. Not market moving implications, but interesting to watch for sure. So we have American Airlines. We have Southwest. We also have Merck, as well as Pepsi. So obviously some really big names in here. After the close, big ones obviously are going to be Google and Intel. Those will be market moving, especially Google. So it's going to be interesting this week just to see how their guides look mostly. I think as far as like actual earning numbers go, again, I don't trade earnings generally speaking. I'm a short term. I'm a day trader. I'm a short term trader. Earnings don't really matter to me as far as the market implication. The short-term market implications of earnings matter to me more than the actual fundamentals of the earnings themselves when it comes to a trading perspective. So the big things to watch obviously are going to be volatility around things like Tesla reporting, on the Nasdaq and the S&P, how that moves, and how Google reports and how Intel reports and how that potentially moves semis and the short-term implications of those moves. So we also have ABBY, AbbVie on Friday morning. Again, not a market mover, but something interesting to pay attention to. So diving into the S&P 500 this week, I'm going to keep this fairly simple. Inside week last week and inside day on Friday. So as far as bias for me this week, I have none. Really what I want to see is how we trade around Friday's range. So to kind of recap this really quickly about what happened last week. Initially last week, I was looking for a continuation to the upside, which we did get on the tariff news. So we had the tariff pause, massive rally we had right here. Then Friday after the close, we had the news of exemptions for certain electronics. So when we had that come out initially last week, I was looking for a pretty decent move, continuation move higher, because obviously the implication of the exemptions was going to be some of the biggest names in this market would have been potentially exempt. But we had another tweet come out that said no, that wasn't true. And we ended up just basically ranging. We put in a 2-day balance range up here on Monday, Tuesday, after a Globex gap up. Never touched the highs of that week from the 90-day tariff pause announcement. And then ultimately, Wednesday, we had weakness come in. We had a true gap lower that never got filled in the regular trading session. This is ETH. So we had a true gap down, and we had a really nice puke and liquidation into the bottom of Friday's range. This is a beautiful day very telegraphed as far as what was going to happen here. We had a really nice failure at 2-day balance highs, or pardon me, 2-day balance lows. We had a true gap down that never got filled. This was just very, very straightforward. A very nice liquidation move with 2 weeks of inventory, weekly inventory that were trapped above it. Very good day, very good read. And then Friday, we just had, a very choppy inside day. Friday was OPEX, and basically we spent the entire day balancing inside of the single prints that broke us down on Thursday. So we spent pretty much the entire session backfilling this giant LVN we had right here. And putting in a lower distribution to turn the weekly into a double distribution down week, and again an inside week. We never shifted the POC into the lows here, but it's a double distribution down week with an inside day. So as far as, like I said, as far as specific bias, I try not to have it much here. We're very much in a headline driven market right now. A tweet coming out from Trump could move this market 5% either direction. So with that being said, we have an inside week. We have a fairly tight range from last week. We set the highs at 54.97s, and we set the lows down into 52.50. So again, for the amount of volatility we've had, it was a fairly tight week. What I want to see is really to see how in the immediacy, what I want to see is how Friday's range breaks. So the big thing with an inside day, we have an inside day on the ETH and the RTH sessions. I'm going to be looking at the high and low of the RTH session mostly to gauge immediate strength. Where I'm looking at as far as like an intraday pivot, in the Globex session and come Monday open is going to be 53.34s. So this is the value area low on last week's profile, as well as the 30-second opening range high of Friday, as well as these stacked IBs down in here. So we have Thursday's IB low, Friday's IB high. So this 34 to 40 area is going to be very impactful in my opinion. A break above or below this, or a failure above or below this, is probably going to signal the early part of the move that starts the move to the opposite extreme of the week, in my opinion. So basically, on an inside day, you want to play the break and continuation of the inside day range. So if we're able to break away from the regular trading hours high, then we could look potentially see if we can get up and test this gap. And if obviously we start offering the lows, then we're going to be looking for the prior weekly lows down in here in 52.50s. So again, it's going to be very little bias for me. I really want to see how we open. I think using this 53.30 to 40 range as the early indication of strength or weakness, aka if we can't find bids above it, probably going to be a weaker day, and we want to see a move down into last week's lows. Or again, if we find buyers above this early, and we can finally break away from this 53.60 range, then I think coming up and testing up into the gap is going to be very likely, and trying to basically revert back to last week's POC up into 54.20s. So as far as who's in control, we have a 5-day balance range right here. So again, we're in short-term balance. We had an inside week. There's no real decision here on the market right now. Strictly speaking, below this gap, below 54.20s, I would still favor the sell side of the tape. So as much as I'm sure there's going to be intraday rotations to get us potentially up to test up in here, if we can't find buyers to break through this gap, if we can't, if a weak market is going to remain offered in this gap. And if we keep seeing rejections up into 54.20s, and then we can keep basically selling this back down and look for the opposite extremes of this weekly range, which would be down into 51.60s, I think, eventually. So if we can actually cleanly break away from 54.20s and we can start finding buyers above, at this point in time, I would be looking for the highs of last week on this inside week range. And then if we are able to actually break away from last week's inside range to the upside, I'd be looking for an immediate test of the 90-day tariff pause rally week high, which is right here at 55.30s, and then potentially try and test up in this gap up into 5600s. So the way this inside week breaks, should potentially give us a nice directional move. I don't know if that's going to happen necessarily until potentially Thursday with Google reporting. So maybe Tuesday with Tesla, but again, I think broader market implications, Intel for semis and Google for tech and semis as well. I think Google would have a better chance of potentially moving us outside of this 5-day balance range. But the big thing immediately is watching how Friday's range breaks. So if we break up or we break down, could give us a pretty fast indication or a pretty near indication of what to expect in the short term. And obviously what we need to be aware of as well, especially dealing with an inside week, is failures to continue above or below. So again, like if you're seeing, if we see an inside day, Friday's inside day break lower, but then we see a really nice sweep and bid and recovery of last week's inside week low, then again, what you could see is mean reversion back up to the opposite extreme. The same is true for the high. So if we do have early strength, but again, we're failing up into last week's high and these stacked weekly highs up here. If we fail up here again, that's probably the most bearish scenario that we'd see actually, is a failure to break away from last week's inside week high. And then you'd be looking for the reversion back down into the middle of this balance, and then potentially the opposite extreme and continuation lower. So hopefully that makes sense. It's a little difficult this week considering considering the fact it was an inside week and considering Friday was an extremely tight inside day. So I think the biggest thing you want to watch is how Friday's range breaks. And if you can see, if you see strong buying, if you see continuation buying, we can join the buy side of the tape and try and look to see if we can get back up into last week's upper distribution, into last week's POC. And if we start accepting up in this upper distribution, we look for the continuation trade higher. Same would be true again if you see immediate weakness and you see Friday's low start to break. You want to see a test down into last week's low. And then if we see this continue to sell, if we see good volume on the sell side getting put in below this low, we should be looking for the continuation move down. We can look for the expected move on the week, which is about 140 points total, down into 5150s, 5160s. And if it gets really nasty, like if we have some misses on earnings or really bad guides from Intel or Google or Tesla or all of them, we could see this continue selling down to 5K or potentially lower. So trying to keep that really high level. I think just paying attention to how Friday's range breaks and noting the fact that we have an inside week and seeing how we trade around last week's extremes is going to be really critical this week. The NASDAQ is basically the exact same situation. So again, we're in short-term balance. We're in this short-term 5-day balance. The big thing, again, how Friday's range breaks. I do think as well a good pivot here would be 18,300s. So this is the weekly POC for the breakaway week that we had for the 90-day pause on that massive rally, as well as last week's POC stacked into 384s. So this range down here, you have the meat of 2 weekly distributions, basically right down into the lows here, which ES didn't actually shift the POC, but the NASDAQ did. So I'm not going to read into that too much. And again, it's going to be how this day on Friday breaks away, and then how, if and how we can break away from the inside week that we also put in on the NASDAQ. So again, I think what we should expect is if we see early strength, we're going to see a breakaway from 18,500s from the RTH highs, and we should be back up testing into these prior 2-day balance lows, as well as this RTH gap that we have that was never filled during regular trading hours. So again, we could see a gap fill reversal back down, but again, if we see immediate strength above the RTH highs, then I'd be looking for the test up here. Buyers aren't really going to have any traction until we're back above this gap. So like I said about the S&P, buyers really need above 5420s. We need to see 5420 actually hold a bid up here. We need to backfill this gap, and this upper distribution on the weekly and 5420s is what we want to see break and hold to get us higher. The same is true on the NASDAQ. We want to see back inside the March lows, but the first sign of strength really would be, in my opinion, breaking back above 18,900s and holding this gap, backfilling and holding this gap for a move back up into the inside week highs. And again, we could fail up here. We could mean revert back down. But the big thing really is going to be watching how do we break Friday's range, and can we accept the upper distribution on both weeks, and does that signal strength? In my opinion, it would, if we can start actually building volume back up here. But Again, I don't really have much bias as far as how this week goes. I think we really just have to play this day to day, and also noting that Monday's going to be fairly light on the volume side. So that's it. Big things to watch. How we break away from Friday's range, and again, noting we have an inside week. We want to see how the extremes of last week's range start to trade, and then same thing is going to be true for the Nasdaq. So if these levels help, mark them down. If this video helps at all, please subscribe to the channel. It would mean a lot. Again, this week is going to be tricky just because of how tight last week's range was. So as far as a bias goes, I think it's a little dangerous to have a bias right now, especially as we go into earnings, and we go into some bigger earnings next week as well. Again, this is a headline-driven market. We have a very tight range that we put in last week with high volatility. We have a very tight range on Friday. Just watch how we break away from it. And if we start to see momentum in one direction, if we start to see continuation buying or continuation selling, it's going to be in your best interest to try and join that rather than try and fight it, especially if we start breaking away from last week's range. You don't want to try and be a hero and try and find the reversal. Play around those extremes and just see where we go. Thanks very much.